Hi everyone, I'm Matt from Look Into Bitcoin, and today we'll be doing a Bitcoin roundup to discuss the current market conditions. We're going to try gain some insight into Bitcoin's recent tumble in price and how we should consider positioning ourselves going forward. We'll be using a number of resources, all freely available on lookintobitcoin.com, your number one source for Bitcoin information. If you haven't already, don't forget to like the video, subscribe to the channel, and turn on notifications to ensure you're receiving all of our content as soon as it's released. So we'll get right into it. First of all, we'll go just straight onto the BTC USD weekly chart here on TradingView, and we can already see here, if you've been following Bitcoin's price action recently, that we have actually dipped beneath the previous cycle's all-time high, which is a first for Bitcoin. We've never actually dipped beneath. If we see here, previously Bitcoin topped out at just beneath $20,000, and we actually came about 10% beneath that just on this weekly candle wick here. We did have some incredibly high volume, which is indicative of a bottoming candle, but we'll have to wait and see. If we just look on the daily time frame, we can see here that as I'm filming this, we're just chopping just above that previous all-time high support, and hopefully we can hold that support. If not, maybe a dip beneath again and potentially even lower prices. But if we go on to lookintobitcoin.com, we're going to go through a few resources, a few of the charts we have here to try figure out where we are in the cycle. So one you might have seen mentioned a lot recently is the Bitcoin rainbow chart. So this is just mapping out these logarithmic curves based on all of Bitcoin's price history, and then using some deviations to the upside and downside. Historically, this has been a great way to determine where we are in the cycle, current market sentiment and emotion. And right now, as you can see, if I just remove all these other bands, we're actually in the lowest band that there is. So I'll just zoom in here. We have just dipped into this lowest band labeled fire sale. This band ranges from about $20,000 to $15,000. So we did actually only dip beneath this just for one day. So it'll be a case of if this was a very momentary dip into this range, or if it's going to be something that we potentially chop around, consolidate in, or just above. But for now, we have dipped into that lowest band, something we haven't done since the COVID 2020 crash. So we'll see how the market reacts to that. Next, we can go on to realized price. And we've been through this a few times before, but this is the total aggregated cost of Bitcoin judged by the last time it was moved on the network. So not necessarily the price it was purchased at, just the last price each Bitcoin was sent from one wallet to another. That is then averaged out into this realized price, and we can see that again we have dipped beneath this realized price value. Currently sits at about $22,500, and historically these periods have not lasted too long, potentially a few weeks or a couple months at a time. But every time Bitcoin has dipped beneath this realized price, it has been a great opportunity for strategic investors to try and pick up some comparatively cheap Bitcoin. Using this realized price metric, again, we can actually see the MVRVZ score. Now, what this is doing is using the market cap, so the total collated price of all the Bitcoins that are available to trade and buy. And that is taking away the realized cap, the metric we looked at before. Rather than the market cap, it's the price that each Bitcoin actually moved on the network. Once you subtract the realized cap from the market cap, we're then dividing it by the standard deviation or the volatility of the market cap. And this MVRVZ score has historically, again, been great at predicting not only potential bottoming areas for Bitcoin's price, but also topping areas as well. As we see this MVRVZ score spike into this red zone here, this is usually indicated a great area to potentially lock in some profits for Bitcoin like we did earlier in this cycle. And once we get down here into this green zone, again, it is showing that a lot of investors are actually at a loss on their positions, and that the great amount of volatility in the market is potentially giving us a great signal to stack sats, and strategic investors will be taking advantage of this. Similar to this, we have the net unrealized profit and loss, or the NUPL. And again, like we discussed before, this is really just displaying how much of a loss most Bitcoin investors are at. So again, it's taking away the realized cap from the market cap and just dividing it by the market cap. And then we get these areas of capitulation, hope, optimism, etc. And we have recently just dipped into the capitulation zone. So this has actually only happened on a handful of occasions during all of Bitcoin's price history. Most recently, the COVID 2020 crash and the dip from about $6,000 to $3,000 in 2018. But before that, we're looking back into the 2015 era to see Bitcoin that has been comparatively this cheap. Next is the Puel multiple, and this ties into the next chart I'll show you, but this is basically just looking at the daily issuance of Bitcoin, or the daily issuance that the miners receive of Bitcoin, but denominated in USD. That is then divided by a yearly average. That might sound confusing, but all it is doing is comparing the current earnings for miners compared to the yearly average of miner earnings. So we see this score here, and once we get a dip beneath this value of 1, that means comparatively miners are earning less than they have over the previous year. So we can see the cyclical nature of not only Bitcoin, but the profit and loss of miners. And as we get into these red zones where miners are making a considerable amount of profits compared to their historic average, that has been a great time for strategic investors to lock in some profits. And same to the downside here, when miners are really beginning to barely even make money compared to their historic averages, that has always been a great time to think about accumulating it. And right now we are in this green buy zone. Just to tie into this, we can actually look to the hash ribbons, which is the 30-day or the 1 month and the 60-day or the 2-month hash rate of the mining power securing the Bitcoin network. So again, this is something we touched on potentially crossing in the last video, and as we can see here, we did recently just get across for the first time in over a year. So this could mean a couple things. As miners begin to capitulate, as miners turn off their mining rigs, does this mean that we have already bottomed, or does this mean that we are in the process of potentially going lower to find a Bitcoin price bottom? Who knows? We'll have to wait and see. The only thing we can say with some certainty is looking at after these hash ribbons have crossed back up, when either we get these green zones here or when we get the white zones when the hash ribbons have crossed and price is increasing. These have been historically great times to consider accumulating more Bitcoin. And the last two charts, we're just going to look at some market sentiment. So the Fear and Greed Index, one you probably are aware of, we are currently printing some values of about 6 and 7s, the lowest Fear and Greed Index scores we've ever seen for Bitcoin. The market has never been as fearful and as bearish as ever, really. Looking at all of the Fear and Greed Index history, which does only go back to about 2018, but the market has never been this fearful. Even the COVID 2020 crash, even the dip from 6,000 to 3,000 in the previous bear market of 2018, the market has never had sentiment this poor. But even as we look at the sentiment of retail, we can actually see a lot of investors are actually accumulating more Bitcoin at these prices. This chart is showing us the Bitcoin wallet containing at least 1 BTC. And if we zoom in, this has actually never been higher. There has never been, right now, as many Bitcoin wallets containing over 1 Bitcoin as we see today. And this hasn't just increased minor amounts over the past few days and weeks. This has increased rapidly, very exponentially almost, as prices dipped. So strategic investors are taking advantage of what they would consider a Bitcoin discount and are trying to stack as much sats as possible. So just to summarize, by almost all metrics we can see Bitcoin is historically undervalued. Strategic investors that have accumulated in these regions have historically been rewarded and have been provided outsized returns by accumulating in these areas. We can also see that most Bitcoin investors are currently sitting at a loss with their investments. We can gather this information by looking at the net unrealized profit and loss as well as the MVRV score. We can see we're currently in a zone that some might consider a capitulation event for Bitcoin's price, as significant amounts of money is beneath where it was invested in. We're currently well beneath our realized price of Bitcoin and could even potentially go lower over the coming weeks. Next, we also have to consider the fact that the Bitcoin miners securing the network are actually capitulating themselves. Not only are retail bearish and fearful, but the miners who are actually securing the network are potentially doing so at a loss at the minute. We've seen the hash ribbons cross, and we can see the Puel multiple indicate that the miner earnings is actually down significantly compared to the historic average. And then just looking at the general sentiment of the market, if you've looked at any social media platforms, if you've taken into account any discussions on Bitcoin or cryptocurrency in general, you'll probably already be aware now is not the most happy time to be in Bitcoin and cryptocurrencies. Although historically, it's been great to counter trade this sentiment, this negativity in the market. Historically, you want to do what others aren't doing. And as we can see, a lot of strategic investors are actually taking advantage of this situation. There's the most Bitcoin wallets containing at least one Bitcoin that have ever existed. So a lot of strategic investors continue to stack sats even with this fearfulness and bearishness. But one thing we have to consider is right now we are on the verge of potentially a global recession. Bitcoin has never actually undergone such global fundamental conditions as we are going through right now. Inflation is high, interest rates are rising. This is something Bitcoin hasn't really experienced in this sense before. So all we can do is look at historic averages, what's happened in the past. But these are untested waters, to be honest. We really need to keep an eye on how things play out and really be open to the possibility that anything can happen. If you like this video, then please visit lookintobitcoin.com, where you can also consider becoming a site subscriber to gain access to live chats, in-depth newsletters, indicator alerts, private trading view scripts, and more, all for a fraction of the standard industry price. And don't forget to leave your comments down below. I look forward to reading them all. I look forward to seeing what your opinion on the market is and where you could see us going in the coming weeks and months. Thank you very much for watching, and I'll see you in the next one.